Back on Morning Line, Doc Friday with us talking taxes, the number 737-7587. We got some lines open if you want to jump in. I think it's still early for some folks to start thinking about taxes.
Because I don't have my forms.
Is it too early?
Yeah.
Well, it's because they don't have their forms. I don't have mine, as you said. But there are some people that can file e-file right now. And if they do, if someone gets it in today, they should expect their return maybe by the end of
21 days, they tell us.
21 days. Well, that's pretty good.
Government tells us 21 days. So, but think about it. In 2016, the deadline was like January 15th we could file, so people almost had their money by the end of January. Then last year it was like the 19th or 20th that we could e-file, and it was like the first week of February. Now it's almost the last day of January, the 29th of January. So you see the government slowly pushing the money out a little further every month, every year.
In your mind, a perfect tax preparer, when you do it, is that there's nothing owed, nothing paid. Zero.
I would say within $500. I'm pretty happy if we can do it within $500.
Yeah, but so many people still, and this still I think is out there today, where they're like looking forward to that big tax return that comes. Isn't that the government having held money without paying them interest for the past year because you didn't claim as much as you could have?
No.
It's not?
No, most of the people that you see getting large refunds are people with children under the age of 17, so they get the child credit, which like $1,200 of that is refundable, and then earned income credit. We're no longer, it used to be back in 2014 and 15, we could actually fill out on the W-4 form if you were expecting to receive earned income, and we gave it to the people in advance. Well, that became a problem because then people owed the government a lot more money because they were wrong about how much they were entitled to. So now the government says, nope, you have to wait until you file your taxes, and now one thing I have to say, the IRS is getting smarter and smarter. They are really matching up. Are these kids truly entitled? Are the people claiming these children truly entitled to earned income credit? Just because you have a child living in your house, or your aunt has a child living in their house, or you know what, my sibling's got 6 kids, so I'm going to take 3 of them and he gets 3 of them. Those are not entitled to earned income credit. There are certain expectations you have to have, and there has to be a certain relationship to this child before you truly have it.
How do you prove that? How do they check that?
Well, I mean, nowadays with Social Security being matched up and some of the other government agencies, so I mean, especially if you're on the food stamp programs and all those all feed into the IRS now, and they're able to do some matching.
Okay.
So they're trying hard to try to make sure that the children listed are truly the people's children.
Okay. All right. So, but as you said, then the bottom line is your ideal thing would be $500, one way or the other.
Well, bottom line is individual. Assuming like you or some of the people, you would be able to do some control because you could change the withholding on your W-2, or if you're self-employed, those are a little bit harder because our incomes are often roller coaster rides. So one year we base our estimated payments on the year before.
Okay.
So if last year I did really good and this year I'm tanking it, well then I might have overpaid.
Yeah.
But we usually just roll that over to the next quarter anyway, so we don't usually ever see the money if by some chance I overpaid.
Yeah, well, the big thing is people that all of a sudden get nailed when their taxes are formed, and they say, oh, I owe how much? Like, I have friends of mine who, for whatever reason, emergencies or otherwise, tap into their 401k.
Oh my goodness. And that becomes
a little
really
about that.
Yeah, only because when you tap into a retirement account, a 401k, especially an IRA, because sometimes 401ks can be loans, and therefore they don't actually have to pay tax. But if you take the money physically out, just withdrawing the money, emergency or whatever, you end up with a 1099-R. You have to pay, if you're under the age of 59, you have to pay a 10% penalty plus, it's 59.5 actually, plus your ordinary income rate, right? So that's, so you can be looking at 30-40% tax on that. Then what happens is, okay, the government comes in and says, oh, you owe us money. Guess what? They go tap in again to pay the government. And we have this whole period of roller coaster rides. Never ends.
That is tough, man. You just don't want to. Also, sometimes there have been situations where people's pensions with their companies come to the end, and the pension goes to them. And instead of rolling it over tax-free into an IRA, they deposit the pension.
Now, if they have 30 days, theoretically, if you're smart, you'll take a check from your personal, immediately put it over into a retirement. But most people don't realize there's such a small window, or they pay off their mortgage. I love it, right? I want to retire, so I take all this money out of my 401k, I pay off my mortgage, now I have this huge tax, or I had enough money come out, but I owed 100, so I had to take 150 out, so now I've lost 50,000 to Uncle Sam. Instead of just taking enough every year to take out to cover your mortgage payments, I mean, what's the difference? I pay it off or I keep it going with mortgage payments, and yet my money keeps growing. Right now, the stock market's doing awesome.
Right. I mean, and you're not a financial consultant, but the bottom line is you would say, unless it's an emergency.
Don't touch it.
Do not mess with your 401k for anything.
Yes, yes. I mean, know the
Because you're
money's
gonna get
sitting
hammered.
there, but it's so expensive. You're looking at basically a 50% tax. So every dollar you take out, take another 50% out. By the time you get hit with penalties and the taxation of it.
Not only that, you're basically raiding your retirement fund.
Well, that's it. What's going to happen when you get older?
Yeah, that's not going to be it.
Social Security is going to be hard to live off of.
Different, yeah, no kidding. Different story though for Roth.
Yes. Well, Roth, true. A Roth is after tax, first 5 years, well, pretty much anytime you put the money in, you can take the principal out, but after 5 years, you can take the earnings or the growth of it out. But again, unless you're over the age or you're in full retirement,
you can
do your best.
You can start drawing on your Roth at 59 and a half, I think.
59 and a half, and there's no, or 5 years, whenever. So unfortunately, there is a window. You can take the principal, but if you put it in at 59 and a half, you can't take it back out.
I mean, if I've had money in my Roth for more than 5 years, I can start drawing on that tax-free right now if I want.
You can take the principal out, sure. No,
there's more principal in there than interest, man.
Don't suggest that happening. So
I'm not going to do that.
But my point
that's
is,
tax-free.
it would be a place if you had an emergency and we had to make a choice between point A being a taxable account or a non-taxable account. I would definitely suggest going for the non-taxable account so we can control it in one-time emergency situation.
But you're not paying a penalty on it or anything. But you would just say leave it alone because that's your retirement.
Well, I mean, you're going to get old.
Yeah.
All of us are.
All of us are, sadly. All right, let's go to Joe. Joe, good morning.
Yes.
Hi, Joe. Go ahead.
My question is, I am 76. I am withdrawing my RMD.
Yes.
And I have been told that if I have the people that's holding my IRA make a check out to a charitable organization, that I will not have to pay taxes on that amount. Now, my second question is, first question is, can I do that? And second question is, what tax form would I put that on if I do contribute to a
charitable
tax-free organization?
Okay, A, you're a really smart guy, or whoever's talking to you has got it handled. Because I love this tax loop, I guess you would call it. It's one of the few for the seniors, as far as I'm concerned. So if you're over 70 and a half and you have to take required minimum distributions, RMDs, there is a loophole in tax which basically says you contact the fiduciary person over your IRA and you have them pay to your church, let's just say a church, $5,000 instead of giving it to you and you writing the check. It's completely tax-free and you don't itemize. It doesn't fall on the Schedule A, which for many seniors, they don't itemize. They don't have enough to itemize. So this way, you completely defer it, and I would have to look up the form. I think it's the 8606, but I may be wrong. I can get that to you if you want to call me after the show or whatever, but there is a form you will put it on, but it's completely, and it shows it on the 1099-R that you receive. In fact, it may actually show it less that in box 2. So like you took out 10,000, you gave the church 5, in box 2 it'd only be 5,000.
Well, so, what they done, I got my form in, and they did not put that tax. They did not put that amount in. They just checked the box that says tax is not determined.
Yeah, you need to contact them because, and I would have to look it up precisely, but for me, it seems like box 2 should be adjusted by the contribution made to the charity, because that's the box that's the taxable amount, as you know. And that way it would fall off of that. But if you call me after the show, I'll be more than glad to look up that information for you, because I don't have it in my head, sorry. But you are 100% correct, and continue to do that, and we can get that information for you.
Okay, thank you very much.
No worries, thanks.
Thank you. So just so I'm clear, before we go to the break, this basically allows him to, he's forced to take some money out because of the age he's at from his retirement fund. And that when he takes it out, we'd have to pay taxes on it. So you're suggesting that when you take it out, give it directly to a charity, or a portion of it to a charity.
If he takes it out and puts it in his bank and then writes it to the church, he'd have to itemize on a Schedule A to take the charity. If he has the fiduciary people where he never touches it and takes it directly to the charity, it immediately reduces the money, and therefore he doesn't have to itemize, and it's still tax deductible.
I see. So the idea is, especially if you're someone who gives to charities.
Absolutely.
And this is the way to do it, is have them do it directly as opposed to him, boom, boom.
Absolutely. Bypass the taxes and itemization.
It's little things like this, and good for him catching it, but these loopholes, he had someone telling him, or you need to prepare. People don't always know these things.
No, and that's a wonderful one we always talk about when we deal with seniors, but again, it's not always something you have to be already at the required minimum distribution age to benefit from this particular thing. And you have to kind of be a planner, right? You have to say, well, you know what, every week I usually give my church $100. So instead of taking the $5,200 out of your checkbook or out of your wallet and throw it in the basket, you have to have them send it directly over. And ideally, once a year, you just have it when the RMD, but you could have them do it every month if you take your RMDs on a monthly basis. You just have to determine what and how you want to control it, but it is the absolute best way to do it, especially with the future.
Because that bypasses everything. I mean, the taxes.
Makes your life so easy. Yeah. I have some that will do all of their charitable contributions that way. They have 6 or 7 charities. They have them all paid out through there. They don't get much RMD, but remember, you're still the same money, but you're getting it pre-tax versus after-tax. How cool is that?
Is there something like that for someone like me who is maybe drawing from... No.
He's too young. I'm
Just
sorry.
shut me down on that one. No, I understand. It's for the seniors when they're required. I was just wondering if there's something along those lines in terms of giving to charity and how you would do it.
We all wish, because we wouldn't have to itemize and we still get it. But no winning for that.
Interesting stuff. All right, listen, we'll take a break. When we come back, we had Mary and Paula, but we lost them. If they want to call back, we'll get their calls. We've got the lines open, 737-7587. It's just the last segment with you when we get back, okay? But when we take this break, she's going to take some drinks of her coffee. She'll have plenty of energy. We'll be back with more right after this.
Don't let abusive debt collectors violate